Hey everybody, purpose of this short video is just to go through something that comes up quite often when we're talking with clients, and that's just the key requirements to get finance approved for a property. So I call it the three-legged stool. In other words, there's three aspects to it. Each one has to pass the test, which I'll show you, or else the stool will collapse, to use the analogy, and the loan won't be approved. So the key things here really when we're looking at this, the first one is the borrowing capacity. It answers the question that we do in the pre-assessment, as we call it, and how much can you borrow question. So in other words, your income has to be able to service the loan that's being applied for. The second one is your deposit. However we do that, whether it's through government benefits or lender benefits, own savings, or a combination of the above normally. And then the third one is your credit history. You do have to have a good credit history. It does depend on what type of loan we're applying for and who with, really importantly, but we discuss that with you on a one-on-one basis. So there are three legs. Let me just go into a little bit more detail. I guess the key part of this is that purchasing your property is all about finance, right? So there's no two ways around that, and so that's hence why I call it the three legs of the loan approval. So the first one is on the borrowing capacity. But the obvious thing is you have to be earning enough. We do go into overtime packaging allowances, and we push this with different lenders. Obviously we know that ourselves, but that's what if you're working with somebody else should be doing for you. Casuals agencies income is looked at differently, which I've covered before. Then your debts come into it, whether it be credit card, car loans, so on and so forth. They are combined to bring down your borrowing capacity, as do your living expenses, which when you get to the loan application point, there's a bit of scrutiny goes on there, and so you just want to be, I'll call it sensible spending there. Just don't blow all your pay packet every month on day-to-day living. And kids, I put that there because that, not obviously, well, it is obvious for those that you have them, does push up your living expenses. Lenders know that, so they do require a higher living expense test to do that. And then also for those of you, let me say, on the more mature age side, and these days, some banks are pretty strict on that. Sort of if you're over 40 years, for example, every loan we're applying for is a 30-year loan. So the older you get, we just have to come up with what's called a debt exit strategy, but it's part of what we work with those clients that it applies to. Deposit, as I mentioned, can come from your own savings. There's a test called genuine savings, which I won't go into here. We'll cover some other time. If there's any stamp duty to be paid, that has to be covered as part of your deposit. Government breaks, lender breaks, as I mentioned, and gifts. You can have money gifted to you under certain circumstances. And then credit history. So even if you've passed those two, if you've got a really crappy credit history, and we do this as part of our process, go in and get your credit history, have a look at your credit score, because it's the first thing banks look at. If there's any other types of credit queries that haven't been disclosed, types of credits make a big one, so you don't want to go to payday lenders and have lots of those on your credit score. Again, I would cover this on a separate video. Things like what's called adverse credit, so don't late payment on your loans, and then just your general bill payment record, making sure that you're paying your existing bills on time. So that's part of really the whole makeup of the three-legged stool. So just those three are the big three of what to be thinking about on a loan approval. We'll see you soon.